Welcome to this edition of Charting the Markets. It's Friday, the 28th of July. As we see risk returning to the markets, we've got another very strong week across the London session this week. We've got record highs on the German DAX, and we've got the US markets retracing a little bit, but I think the long-term trend still seems to be in place. But outside of that, it's been about the Australian dollar falling back today on poor economic data. And we see a continuation of this interest in the US dollar. Let's move first of all with what's going on the equity markets, and we go with the London FTSE 100. The reason why I want to take a look at this to begin with is because it has bucked the trend on the early part of today's session, the 24-hour markets on the IG platform. We had initially been penciling in what looked like a lower low, and in fact exactly what we got in today's session at the beginning, but all of a sudden we've seen a springboard up. And we see some good earnings coming through. Fundamentally, it's been supported by the individual corporate news stories that we're getting and a raft of earnings that we've seen this week, which on the whole have been pretty good. I think the real impetus on this market, from a fundamental point of view, has been expectations that the Bank of England, when it meets next week, is going to continue to raise interest rates. But there is now potentially the end in sight. And that's what many are hoping will be detailed in the rhetoric around the Andrew Bailey statement and the voting members' statement. The 9 MPC members are likely to say that they may well be raising rates, but it could well be the beginning of the end of the rate rising cycle. We've seen evidence recently that we've got a lowering of inflation, and that can only be good news for those that want to see an end to this rate rising cycle. Now, looking at where we are, I've drawn this Fibonacci on here. From the high point we had on 79.38 back in April this year to the swing low and then this rebound. And we've been hesitating around this 61.8% retracement level. I'll just get rid of that line across the middle there. So you can see at 76.67. And all of a sudden it's used that now as a springboard. So that's a really good line of support at 61.80. Now, if you haven't entered this market, if you haven't been long on this market and you want to take a trade and you want to take a long trade, and I say if, it's because I'm not a trade recommendation, it's just a way of setting up the potential upside from this point. The Fibonacci technical analysis tool would suggest the next price target is this dotted line up here at 77.70.7. That's a 76.4% retracement on this pattern here. Now we've escaped the resistance line at 76.67, which was the 61.8% retracement. We've now got that next line to watch out for. So that is now your new price target. Your stop goes underneath the 200-day moving average down around about the 7,600 level. And if you get a candle close beyond the 77.70 level, you're then on a total retracement all the way up to the top, which were the highs we had back on the 21st of April at 79.38. And then further on than that, you've got the record high, which is the red dotted line, which we've seen there. Talking about record highs, in the last 24 hours, we've seen a record high on the German DAX. It has been an intraday trade yesterday. It hadn't gone down as a new all-time record closing high. But in the markets in yesterday's session, we were up at 16,448, which are 18 points above the red dotted line. So it was an intraday record high. And indeed, you can see, despite the fact we saw a pullback late in yesterday's session, the 24-hour markets, we've now got more upside as well, taking us through. So if we close at these levels at the end of the day, it will be a new record close for the German DAX. We're currently trading 16,363, despite the fact the German economy is in recession as of the fourth quarter of last year and the first quarter of this year. We are expecting this to start to lift out from where we are. But at the moment, at least, all looking potentially good for the German DAX. In terms of where we are on the US markets, just want to follow up on one market where we saw a peak above the recent resistance to go to a new 20-odd month high, February 2022. The 35640 was that line we broke yesterday, and then came the pullback. But this is only a small pullback in what is otherwise a long-term market trend on the way up. You can see this underlying line of support. If you're a day trader, yes, there's an opportunity potentially, possibly here, to take it further on down. But I don't see that necessarily happening. Later on today, we've got PCE, the price indicator for inflation, coming through in the US economy, and that's expected to see a further tick lower, which will give extra evidence in support of this idea that perhaps maybe the Fed's getting very close to the end of its rate rising cycle, and that is having an effect on these markets in terms of the upside. We are just taking a little bit of a breather at the moment on the way down. If you were looking for a better price to get short, and if you think there's more downside to go, which I'm not completely convinced is the case, you'd use a Fibonacci tool to take you down to this line of support down here moving up to that high we saw yesterday. If you're looking for a better price to go long on, you need to see prices move down to this line of support down here, the 61.8% retracement at 34,400. Personally, I don't think it's going to happen. I think we've got a little bit of buying interest in the shares today. Got some more earnings out in a short while from the likes of Procter & Gamble, Colgate-Palmolive, ExxonMobil. And if we do see any further on upside from that, there's another reason, I think, to buy the Dow. Let's take a look at what's happening on the foreign exchange markets as we see more evidence that suggests that the Fed is nearing the end of its interest rate rising cycle. And of course, we saw yesterday the European Central Bank coming through with its interest rate decision to cut rates. We've got more interest actually on raise rates. We've got more interest in what's happening with the dollar, more downside for the euro. So this is bucking what is otherwise a trend, I think, which should in theory be in the opposite direction. We now have the euro dollar trade all the way down at support at 76.40 at 109.38. I'd want to see whether or not we maintain this line of support before taking any position on this. If I saw a severe uptrend from here or a move up from this line of support, clearly a long trade would be in order. I wouldn't want to go short at these levels because I want to see a candle close below the 109.38, the 76.4% retracement. But if I were to get that, I'd then take a short position all the way down to this line of support at 108.34, which were the lows that we started out on this fib back on the 6th of July. Outside of the euro dollar, one of the other interesting moves in today's session has been what's happening with the Australian dollar. Fundamentally, we've seen some very poor data coming through on retail sales, and this adding to other areas of concern about the Australian economy now. Not concern as much as the workings out of the higher interest rates we've seen from the Australian Central Bank. And this is having its effect. It's cooling down the economy. That's exactly what interest rate rises are meant to do. I want to talk about this double top pattern that we've got here and how to trade this, just to get rid of that ellipse, just to show you what's happening there. Now, I've drawn a dotted line between the base point here and the top, and I've projected that down from here. Now, if we get a candle close below this line of support at 65.97 on a weaker Aussie dollar, this is the dollar falling against the US dollar. If we get a candle close below that line there, I'd be then taking it all the way down to the projection down here, all the way down to the 63 cent level. 65.97 is where we're looking at support at the moment. So you get a break of that. You then take a short position all the way down to 63.01, which would be the completion of this double top pattern for the Aussie dollar. One of the other areas of the market we've been talking about, again, fundamentally, I think it's worth talking about what's been going on today because the Bank of Japan has begun on that long journey of exiting from the easy monetary policy. We've seen some of the rhetoric change from the Bank of Japan under Mr. Ueda, the most recently appointed central bank governor of the Bank of Japan. The BOJ left interest rates unchanged, a negative 0.1%. So that's very much still easy policy. But this tweaking of the outside periphery edges of this bond yield control and the fact they're loosening it a tiny touch gives me this idea that we've got further to come on that long road. Now, initially what happened was we saw the big buying into the Japanese yen and the yen strengthening. This is the dollar down against the yen. Since then, there has been a retracement and the dollar is seen up against the Japanese yen. But I think now we're very, very close, going back down to this line of support we had established back here at 13,726, which were the lows that we had there back on the 14th of July. I think that's the next line to watch out for when we get the next area of support for this dollar-yen trade. Now, as we go into the back end of the week, we always take a look at what's happening with spot gold. I want to take a look at oil as well in just a few moments' time. But let's begin with the precious metal going into the back end of the week and this move that we've seen on the US dollar. And it's seen that interest in the dollar has seen the price of gold drop. Now, if we look at the chart here for gold, it was down yesterday. But interestingly, I think technically, it did try and pierce this line of support here, which is the 50-period moving average. And that has held at the moment. But I think if you get a candle close below there, you're then on the way down to this 1910 fib support, again, which we tested and failed to get really seriously below that back at the back end of June. And I think that's the next area to watch out for. So long as you get interest in the US dollar and so long as you get extra reasons to buy these risk assets like equity markets, people will be selling gold down in order to find cash to go into other areas of the market. So I think 1910.09 is the line to watch out for here. Should you go short on this, if you haven't already got opened a position, you've got a position open. If you were to go short, my stop would be above the 1990 level. with a view to taking that down to that 1910 support. You then regroup and work out where it then goes on from there. But the price of oil is a very different beast completely. As we go into the back end of the week, we're seeing new 3-month highs. Continuation of this idea that we've got the fundamentals supporting higher oil prices. You've got increased demand potentially coming through from China, which is now supporting its economy again through the authorities. And also then you get this idea that not enough investment has gone into oil fields. So that means you get less support from the supply side coming through. So if you do get an uptick in demand, a restriction or not enough supply coming through, the end result of that economically is higher prices. And that's exactly what we seem to be getting at the moment. What we don't know about is what the OPEC decision is going to be here, and whether or not they're going to twist the supply-demand balance again. At the moment, they obviously seem quite happy with the rising price, but that is feeding through once again into inflation, which has its effect on the outlook for interest rates of these central banks. And that's another reason, I think, why inflation remains relatively highly elevated, because there is this expectation, I think, that we got the support of higher prices given to us by the input costs coming through from higher oil prices. That's something else we always have to consider. So that's where we are in terms of the price of oil. Potential upside, if you go long from this point on here, your stop would go below the 200-day moving average at around about the $81 level. We're currently trading 83.49. The next line to watch out for on the upside, if you are long on this, your price target would be 87.15, which are the highs we had there back on the 12th of April. That's it for today's chart in the markets. We'll be back at 1:30 today. Angeline Ong will be with you with the release of that PCE data out, and also taking you through some of the stocks to watch ahead of today's US Open. That's at 1:30 p.m. today, UK time, on the IG platform. And then Angeline will be back at 4 o'clock this afternoon, looking ahead to some of the events to watch out for the week starting Monday, the 31st of July.